$92.25. That's where silver closed yesterday, January 14th, 2026, the highest price in human history. Higher than 1980 when the Hunt brothers tried to corner the market. Higher than 2011 when the world was melting down. The all-time record. And then within 24 hours, it crashed nearly 6%, wiping out billions in value in a single trading session. So what the hell just happened? Two words: Donald Trump. Yesterday, the president made two announcements that completely flipped the fear trade on its head, and if you've been watching precious metals lately, wondering if you should buy, sell, or hold, what I'm about to show you is the clearest explanation you're going to find anywhere. My name is Ryan, and I went down the rabbit hole of precious metals, Federal Reserve policy, and global supply chains so you don't have to. And if you want to understand what's really happening in the markets right now, beyond the headlines and the hype, make sure to hit that subscribe button and give this video a thumbs up. Because what happened to silver yesterday isn't just about one metal or one day. It's about the global financial system showing cracks that most people don't even know exist yet. Here's what we're dealing with. Silver hit an all-time high and crashed in the same week. That doesn't happen by accident. And the reason it happened reveals something much bigger about where we are economically, geopolitically, and financially. By the end of this video, you'll understand exactly why silver went parabolic, what Trump did that caused the crash, and what comes next. Because this story is far from over. Let's start with what actually happened yesterday. President Trump made two major announcements that caught the markets completely off guard. First, he said he's holding off on imposing new tariffs on critical minerals. That includes rare earths, lithium, and yes, silver. Instead of slapping import taxes that would have sent prices even higher, he's choosing to negotiate with foreign nations to secure supply chains. That's a complete reversal from the aggressive tariff threats that have been building for weeks. Second, and this is the big one, Trump signaled a major de-escalation with Iran. He said he'd received assurances that the situation is calming down. This comes after the United States had started pulling troops from Al Udeid Air Base in Qatar in preparation for potential military action. That's not a small move. Al Udeid is one of the most strategically important bases in the Middle East. When you start pulling personnel out, markets notice. When you suddenly reverse course and say everything's fine, markets really notice. These two de-escalations pulled the rug out from under the safe haven trade. And silver, along with gold, had been riding that safe haven wave straight to the moon. When the fear disappears, even temporarily, the money flows out just as fast as it flowed in. That's what you saw yesterday. Profit-taking. Repositioning. A collective exhale from traders who'd been holding their breath waiting for the next crisis. But here's the thing. If you think yesterday's crash means the silver story is over, you're missing the forest for the trees. Because what drove silver to $92 in the first place hasn't changed. Not even a little bit. And that's what we need to talk about next. Let's zoom out and understand why silver went so parabolic in the first place. Because this wasn't a normal rally. Silver is up 29% in just 2 weeks. Read that again. 29%. In 2 weeks. That's not investing. That's a stampede. And for the full year of 2025, silver gained over 150%. Its best year since 1979. The last time silver did this, we were dealing with double-digit inflation, oil embargoes, and the Cold War heating up. Sound familiar? This rally has been driven by a perfect storm of factors that most people aren't paying attention to. And I'm going to walk you through each one because when you see how these pieces fit together, you'll understand why even a 6% pullback might just be a pause, not the end. First, China. On January 1st, 2026, China implemented new export restrictions on silver. They now require government licenses for silver exports. And here's what that actually means in practice. It restricts 60 to 70% of global supply. China doesn't just mine a lot of silver. They control the refining, they control the processing, they control the supply chain, and now they control who gets it and when. This isn't speculation, this is policy. It's in effect right now. And it's exactly the kind of move that sends commodity prices into orbit. Why would China do this? 2 reasons. 1, they're securing strategic resources for their own industrial needs. And 2, they're flexing geopolitical muscle. Silver isn't just a shiny metal people buy for jewelry. It's critical for solar panels, electric vehicles, semiconductors, and artificial intelligence data centers. Every major technology driving the 21st century requires silver. And China just put a choke collar on global supply. Second, the Federal Reserve situation. This one is getting buried under other headlines, but it matters. There's a criminal investigation into Federal Reserve Chair Jerome Powell. Now, whether that goes anywhere or not is almost beside the point. The fact that it's happening at all spooked markets about central bank independence. The Fed is supposed to operate independently from political pressure. When that independence gets questioned even a little, it shakes confidence in the entire monetary system. And when people lose confidence in the monetary system, they buy hard assets, like silver, like gold, things that have value no matter who's in charge or what policies they're pushing. Third, industrial demand. This is the part most people completely miss when they think about silver. They think of it like gold, a safe haven, a store of value, something you buy and hold. But silver is different. Silver is consumed, used up, in industrial processes that can't easily substitute something else. Solar panels alone are devouring silver at a rate that's increasing every single year. Each panel requires about 20 grams of silver. Global solar installations are exploding. Do the math. Then add electric vehicles, which use roughly twice as much silver as traditional cars. Then add semiconductors. Then add all the infrastructure being built for artificial intelligence. We're in the middle of a technological transformation that requires massive amounts of silver, and the supply can't keep up. Which brings me to the fourth factor, the structural supply deficit. This is now in its fifth consecutive year. Demand is at 1.24 billion ounces. Supply is only 1.01 billion ounces. That's not a small gap, that's a chasm. And it's not getting better, it's getting worse. Now we get to the part that actually matters. Everything before this was just context. Because here's what's really happening in the physical silver market. And this is what separates people who understand what's coming from people who are going to get caught off guard. COMEX silver inventories have crashed 70% since 2020. COMEX is the commodity exchange where silver futures are traded. It's supposed to have enough physical silver backing those paper contracts to maintain market stability. But the inventories are collapsing. Why? Because people are taking delivery. They're not trading paper anymore. They're demanding the actual metal. And when that happens, the whole game changes. London vaults are down 40%. London is the other major hub for precious metals trading. Same story. Physical metal is leaving the vaults faster than it's coming in. This isn't a blip. This is a trend that's been accelerating for years. And it's creating a situation where the paper price and the physical price are starting to diverge. In Shanghai, physical silver is trading at a $10 plus premium over Western prices. Think about what that means. Someone in China is willing to pay $10 more per ounce than someone in New York or London just to get their hands on actual metal. That's not normal. That's a sign of serious supply strain. When regional premiums get that wide, it tells you the physical market is fragmenting. And when physical markets fragment, prices get volatile, really volatile. The gold to silver ratio has dropped to around 50. Historically, this ratio has bounced between 50 and 80. With occasional spikes above 100 during extreme fear or extreme calm. But the long-term average is somewhere around 60 to 70. Right now, at 50, silver is actually outperforming gold on a relative basis. That's significant because gold just hit $4,630 on Wednesday. Also, an all-time high. Gold is up 70% year over year and 22% just in 2026, and silver is keeping pace, even outpacing it. When both metals are running together like this, it's not just a safe haven play, it's a signal that people are losing faith in fiat currency itself. If you've made it this far, you're already ahead of 90% of people trying to understand this market. But don't stop now, because what comes next is where the real insight is. This is the part about where the smart money is positioning and what it means for you. JP Morgan just came out with a forecast, $5,000 gold by the end of 2026. JP Morgan, one of the largest and most influential banks in the world. They're not in the business of making wild predictions for clicks. When they put a number like that out there, it's because their analysts believe the fundamentals support it. And if gold is going to 5,000, what does that mean for silver? Analysts at Jupiter Asset Management are saying $100 silver is absolutely coming this year. Not maybe, not possibly, they're saying it's coming. Now here's where it gets interesting. Rick Rule just announced he's selling some of his silver position. If you don't know who Rick Rule is, he's a legendary investor who's been in the precious metals game for 5 decades. 5 decades. This man has seen every boom and bust cycle in metals since the 1970s. He bought silver at $25. He watched it run to 80 plus. And now he's taking profits because, in his words, his reason to own it has taken place. That's not bearish. That's smart position management. He's not saying silver is done. He's saying he got the move he was looking for, and he's locking in gains. That's what professionals do. They don't marry positions. They execute a thesis, take profits, and move on. But here's what's important. Rick rule selling doesn't mean silver can't go higher. It just means the easy money has been made. What comes next requires more conviction and more tolerance for volatility. So let's talk about what today's pullback actually means. Is this profit taking after an insane run, or is this the start of a larger correction? The honest answer is nobody knows for certain. But we can look at the factors that haven't changed and the factors that have. What hasn't changed, China still controls the supply chain. The export restrictions are still in effect. Industrial demand is still growing. The supply deficit is still real. COMEX inventories are still depleted. The Federal Reserve is still under political pressure. The national debt is still $38 trillion with over $1 trillion in annual interest payments. None of that changed because Trump decided to ease off on tariffs and de-escalate with Iran. What has changed? The immediate fear premium is gone. The market was pricing in worst-case scenarios, tariffs that would choke off supply even more, potential military conflict in the Middle East that could disrupt global trade. Those fears, at least for now, have been dialed back. And that removes the panic premium from prices. That's what you saw yesterday. But here's the trap. Markets have incredibly short memories. The fear will come back. It always does. Maybe not this week, maybe not this month. But the structural problems driving this rally haven't been solved. They've been papered over with optimistic statements and diplomatic negotiations. And when those inevitably fall apart, or when the next crisis emerges, the safe haven bid comes roaring back. Except next time, the physical supply will be even tighter, the inventories will be even lower, and the premiums will be even wider. Now let me tie all of this together because when you see how these pieces connect, everything changes. Silver didn't hit $92 because of a single news event. It got there because of a convergence of long-term structural trends. China restricting supply, industrial demand exploding, vaults emptying, paper markets losing credibility, central banks losing independence, governments drowning in debt. These are not short-term problems. These are systemic issues that take years, sometimes decades, to resolve. Trump's announcements yesterday removed some immediate pressure, but they didn't fix anything. China's export restrictions are still in place. The supply deficit is still growing. The Fed is still politically compromised. The debt is still compounding. All Trump did was buy some time and calm some nerves. That's it. And in markets, buying time and calming nerves is often just delaying the inevitable. The real question isn't whether silver can go higher. The question is whether you understand what you're buying and why. If you bought silver at $80 thinking it was going to 92 and you'd flip it for quick profit, yesterday probably hurt. But if you bought silver because you understand the long-term supply and demand fundamentals, because you see the monetary system cracking, because you recognize that physical assets have value when paper assets don't, then yesterday was just noise. Here's what I want you to understand. The precious metals market is not like the stock market. It doesn't move on earnings reports and quarterly guidance. It moves on fear and confidence. Fear of inflation, fear of war, fear of monetary collapse, confidence in governments, confidence in central banks, confidence in fiat currency, and right now, both fear and confidence are being tested simultaneously. Fear is spiking because the structural problems are real and getting worse. Confidence is wobbling because the solutions being offered are weak and temporary. We're in the home stretch, and I've saved something important for the end. Because the story of silver at $92 isn't really about silver at all. It's about what happens when trust breaks down. Trust in institutions, trust in currencies, trust in the systems that have governed global finance for the past 50 years. Silver is just the thermometer. It's measuring the fever, and the fever is rising. When China locks down supply chains, that's a trust breakdown. When the Federal Reserve Chair is under criminal investigation, that's a trust breakdown. When national debt hits $38 trillion and nobody has a plan to pay it down, that's a trust breakdown. When physical premiums explode and inventories collapse, that's a trust breakdown. Silver is reacting to all of this. It's not creating the crisis, it's reflecting it. Trump's announcements yesterday were an attempt to restore some of that trust. to signal that the adults are in the room, that diplomacy still works, that things aren't as bad as they seem, and markets responded. They always do. But trust isn't rebuilt with press releases and assurances. Trust is rebuilt with action, with consistency, with solutions that actually address the underlying problems. And so far, we haven't seen that. So here's where we are. Silver hit an all-time high of 92.25, then pulled back 6% in one day. The immediate catalysts were Trump easing tariff threats and signaling de-escalation with Iran, but the fundamentals driving the rally remain intact. Supply is constrained, demand is growing, inventories are depleted, the monetary system is under stress, and the physical market is tighter than it's been in decades. JP Morgan is forecasting $5,000 gold. Jupiter Asset Management is calling for $100 silver this year. Rick Rule, after 50 years in the game, is taking profits but not dismissing the broader thesis. The market is sending signals. Are you paying attention? Silver, gold, the Fed, inflation. What's the next topic you want me to dig into? Drop it in the comments. Is there something happening in the markets right now that nobody's explaining properly? Tell me below, because that's what this channel is for. Cutting through the noise and giving you the information that actually matters. The person you're becoming starts with the decisions you make today. And right now, whether you own silver or not, whether you're bullish or bearish, the most important thing you can do is understand what's really happening beneath the surface. Because the next time fear spikes, and it will, you won't be caught off guard. You'll know exactly what's driving it and how to respond. Your future financial self is counting on you to pay attention now, while there's still time to position yourself correctly. Don't let the noise distract you from the signal.